Welcome back. Session 11, FinViz. Check in our hot list for evaluation and possible investment. Right now we're on Titan, and we'll go ahead and check the stats on Titan. Hopefully you're having a good day. Merry Christmas to you. We'll be working tomorrow on Christmas as well. It's a non-stop find the best investment type of thing going on here. Okay, 23 million we have, 1 billion, 23 million. And what we're doing now is just finding like a quick eval for these three companies. Let's make sure I have that done right. Good. Okay. We'll do these two together, SQM. SQM. 18 billion, 285. $18 billion, 286 billion, 286. Last but not least, ALB. Check this. Quick eval with ALB. 20 billion, 117 million. 20 billion. $117. Kind of different. All right. Let's take that there. And booyah. There. And there you go. Now our quick evaluations are done. Now we'll go ahead and do the earnings per share. And then we'll rate these companies. The O and the P. Go with Polaris here. Okay, Polaris. PII. Didn't compute. Polaris, here we go. Polaris, and then we go back to 2017. 274, doubled, 527, 202. So 1 year is off, and the last couple of years are just fine. Let's see how they're doing for this year. Back to fine again. So we'll call it, let's see what we have here. 5, 7, call about 950. And 50, 274. Plug these numbers in here and see what we get. About 50. 35%, very good. Things are heating up. They had that one down year, but overall, very solid. We give them a B. PLPC is the next one up. PLPC. And like I said, I'm not too familiar with any of these companies outside of the ones that I know, like the brand, Polaris, I see on the street. Harley Davidson, I see on the street. I know them all from Milwaukee. So I definitely Harley very well. This company, not so much. So there's a little more legwork to do to get familiar with them. Okay, so 2017, they were at 248, doubled, 463, 605, 720. Very beautiful. Wow. That is very impressive to see that. Let's see. And then 4, 8, 11. Wow. I don't even know, like for this year, call it like 14. Yeah, I would say 14. And this is exactly what you're looking for, like as far as earnings go. 248, doubling then, just retaining it for the most part. 603, I don't see why that's not A plus. And then who knows for this year, I think 13.50, $14. I think 13.50 is very good. 248 to. We're finding some really good companies here, guys. It'd be really insane for me to think that we can't make some serious money. And these companies are really solid, and we put a lot of work into this. So when you do the work, it does pay off. I mean, obviously, no one's gonna send me a check for doing what I'm doing, but it comes in form of the investments. I think a solid A. This company looks really good to me, but yeah, I never heard of them, but yeah. Some companies to know about for sure. Get on the phone, make some calls, conference it in so you can witness and see what that's all about, how I go about it. I don't usually talk to an investment department. I just talk to average Joe people like me and you. Ask them why they chose this job versus some other jobs, and you find out a lot of information just by common sense or just common ground questions. Let's see, precision drilling, PDS. Find out about them. PDS. Sorry for the length of video too. It's just a lot of work we have to do, but I definitely feel it's worth it to find companies like we just seen. That was just a thing of beauty. PDS. Precision drilling is where we're at. Sounds interesting, like some oil company. Look at this. This is night and day difference here. Precision drilling. -7, -15. Precision drilling. Oh, I see. So they're back. So the question here is, did it change things around for us to invest? But looking at that, that's a complete F. I mean, you really have to D minus. They really have to change things around because they were just negative too many times. I mean, 7, -15, and they're positive 1 year, and then it's back in a dump. So for this, I don't know like why, but I'm not even gonna mess with it after seeing a company like we just seen before. There's no reason. I think we have too many good companies here to waste our time with some company like that. Maybe there's some cash thing I've seen or I heard something about them, but I just don't like the earnings enough to get them off my hot list right now. HD Hog. Harley Davidson. See, that's more like it. Feel confident with these type of $3, 321, 271. So they had their problems, but then they rebound in a big way. So 421, 501. Then now 2, 344. So figure about 6, maybe a little higher. I don't know if holidays inspires motorcycle buying, but hopefully it does. 6, I would go $6 here. Feel confident with that. 303 to the 6. call it 650. Those 3 here to 650. See what we have. 16%. And like a big conglomerate, I wouldn't really expect that they can give you too much more than that. They did have some down years, maybe B minus, C plus, that type of thing. B minus here. Okay. Got ULH. Universal Logistic Holdings. Check them out. Let's see what we have. Okay, so $1.84 will double. Retainage 134, 178. Then you're ramping up 274, 637, and can you retain into this year? $1.80, 260. So maybe, yeah, you went down somewhat since last year. However, 99 cents to 320, we'll call it. Let's see where that gets us. So you have to figure it out. Yeah, 32%. Let's take a look at how they got there. Let's see, 99 double retainage 3, and then this year was just, you know, if you didn't count this, like say if this was 285 and then 3, then you know everything looks perfect. You just had this breakout year, and that's what you want every year, but that's unrealistic when you have such a nice percentage. What was it again? 35, 32, 32%. Okay. So 32%, and overall, it wasn't for that 1 year, which is still good, and you had that retainage year. Yeah, a solid B, I'm gonna say for that. TSEM, check them out, see what we have going on there. TSEM 2017, we have 3, and then you're losing a half, and then you're losing almost a half again. Okay, so this is another one where I might just call it 4. You got a 4, but you started with a 3. I think I'm just gonna. Yeah, I just don't see enough good here where I think I'm just gonna give them an F and probably just cross it out of the list. I'm seeing too many good things with a lot of other good companies. When it comes right down to it, I'm just looking for one investment, you know, and if you missed the other episodes, what we're doing, what this is all about is selecting one company to invest $50,000 into, essentially. So we want to make sure we have the best standout company, and when these other companies are not even, when their earnings are not reliable, might as well just throw them away, put them in the dumps, and start over. All right, so we have Titan here, TITN. Let's see what we have now with Titan. Okay, that's already done for us. That's nice. 450. 2017. We had negative 65 cents, but then then you're not as negative, which is okay. It's all right to start negative if you're a young company. I don't know what the case is with them, but we started out negative 65. They were in half, then it got positive, and they stayed positive, 55, 63, 86. So the ramp up is an A work there, as long as we can retain it and it becomes, the risk of going forward, like how likely is it that they can retain it? And of course, we have to go back in time and do some of their metrics to see what, how we can determine the evaluation going forward. 260, I would say 5 is, or is it, it's already done? 220, 2023. Oh, it's already done. That's right. 450. So I'll just take off the cents there. So I go 390, or yeah, I'll just go 390. Can't put negatives here, so that's why I just take it off. Yeah, 2,700%. Again, the ramp up was good over the last 7 years. However, there was that leg before. So what was that all about? Will that come back to haunt us? So even though they got A for this 7 years, there's still a lot of work to be done to make sure that we can secure that going forward. That's going to be the big question with Titan. SQM. Oh, I remember this is a mining company in Chile. $1.63, $1.67, $1.06, $6.63. So I don't know what happened there. Can they retain 2, 4, 5? Yeah, they have retained that. Retained a good score. It's half of what they had last year, but from what I saw, like $8 is definitely realistic. Call it 8.10, $1.63 to the 8.10. Growth rate there, 56%. And the way they did it, pretty good. They went back and retained. It's up and down. I'd probably give them a C here. 58%. Okay, so 58%. C grade, a lot of ups and downs, which in mining, it's to be expected. I understand. ALB, at the end of the day, you got to ask yourselves, is this the business for you? Is this what you want to do? Do you want, when the mine hits big and they're ready to rock and roll, it makes some big money? Is that your type? Does it fit your personality and what you want out of a company? You have to, ask yourself those important questions. For me, I like more predictability and more solid fundamentals. However, if there's something that I can hang my hat on going forward, like if a new mine is already there and they can predict, profitability going forward, that might be something I might partake into. Okay, 49.65. Yeah, here we go again. It's pretty but good overall. 49 cents. Can they retain that $22 that we've seen there? 11, 16, 19. Yeah, they can. I'll just call it a 22. Yeah, we'll call it, they had 23. I think they could easily get there again, or very close. I'll call it 22.50. So 49 cents to 22.50. So again, that's just very good. We're finding quality companies here, and companies that I definitely think you should want to know about. I definitely want to know about. I'm excited. I want to know all about their company, how they can, ramp up their earnings like that, and more importantly, is it sustainable? Can we predict that going forward in the future, or they just have some good years and now they're kind of done with it. But you know, that's what we have to find out as investors. Okay. JCI. Johnson Controls. See what their earnings look like. $17.72, 234, 6, very nice. And then you just go back down to the well, which is not so nice. 172 to 270. Let's see what we have here. 270. And that's 230, 250. Maybe I'm thinking 330 would be a good estimate of where they might end up. So 330, 172 to 330. %, but then again, you know, Johnson Controls, they've been around for a long time. I don't expect them to hit, you know, a really big number. And he did go down for those couple of years, so therefore I give him a C. Okay, 2 more companies left. MedFat, and we'll go through, we'll grade them real quick, and then we'll set you loose, and then we'll, like I said, we're going to work tomorrow too, because this is very important that I find a quality company by then next week. See what we have going on. Pretty confident by what we've seen here today that there'll be something that I'm interested in. Okay, MedFast. Okay, MedFast. Okay, MedFast. 232, 4, 6, 8, 14. It's almost perfect. The earnings are so solid. I don't know why this company is struggling with the price and then the evaluation. So those are things that we have to figure out. The quick evaluation did not look good on this if you were around for that video. 4, about 5, 9. Yeah, I could see another $12. They're just so consistent here. 232 to 12. %. Like I said, I think they get an A. Huge numbers, and their stock has been battered. I think they were at like 300, I want to say, with the price at one time, and that was justified with the type of earnings that they're pulling in and a consistency. So we'll have to see, do a little more further investigation on that one. That could definitely be a possible place to park my money. Let's see, IIPR. Negative 13, then 76, 206. So nice. I'll give them maybe a B plus, it looks like. What are they doing this year? 290. Give them 5. They were just right about 557 last year, 557. Five scored. Yeah, 700%. All right. So now we have more data to go through. I'd say A is easily the score there with just what we've seen with the earnings too, and because they're expanding. We'll have to see why it was negative and see if that might come back to bite us, see if there will be more negative earnings in the future, because we definitely, when we invest, we don't want to see any negative. We want to see more uptrend from where they're at right now. ALB, so their evaluation 171, so we have a nice ceiling there, 650, and an A. Definitely want to know more about this company. I can't see them give them anything other than an A. Let's see, so 57, 63, we have a good ceiling. Oh, look here, some got mistake problem. Okay, so you're at $68 is what we want. We got 63, so a little concern there, and the C there, but they ramped up so nice. Again, a mine, so we have to figure that out in the future, like the mining business and things like that. I never invest in mining, so there's some definite questions that I'm gonna have to inquire on. Titan 43, 27, so you have the ceiling there is good, rock solid. Before that though, there looks like the last 5 years or 7 years, however you want to figure that, that's didn't look so nice. So maybe they turn things out for the future, but we're definitely going to have to figure that out. Let's see, Tower Semiconductor 27, we're looking for 36, so that's concerning. And then I got an F. So yeah, we're gonna blink out this company. Going, let's see, 38, 31. So you have some ceiling there, 32 and a B. So I would definitely give them a B for right now. Harley Davidson 72, which is great. Got the ceiling 16%. I don't expect them to have anything other than that. I think 20 would be the highest that they would show, just being around as long as they have and being so big. It's definitely hard to get bigger percentages from where they're at right now. So I understand that. PDI, I think that's the other F. Yeah. So we're just gonna F this company out. PLPC, $1.72, nice ceiling, 61% A. Definitely want to know more about that company. Polaris, it helps knowing their brand very well. And they're just very solid company here. We had a little trouble throughout the years. If we can find out what that is, and if we're past that, Polaris could be the one. Other than that, we have grades now. Very exciting stuff. We're getting closer. Like I said, this is our canvas. We're painting a picture here. And again, we'll just recap it. We were basically at a 360 when we started doing this a few weeks back. And now 373, the market has really ramped up. I did averages where, I figured 8% a year and 25% variance, high to low per year. Everything adds up to where we're at now. 358 is average. Next year, I predict 15%, just based on a 10-year, that would average out to 25%. So we're pretty close to the high. Could we have 15% ramp up from here? Absolutely. We could go to 405, and that would just blend in with all the numbers presented. But yeah, knowing the index is 90% of the work, because these stocks will reflect what the index does. If I invest in the A company, the best one I have the most confidence in, but the market loses 20%, the idea of me, turning around a quick profit when the market is crashing, no, it's not likely. So that we definitely have to be cautious of that. We had a huge ramp up. Where does the market go from here? Will be a lot of legwork that we're going to do throughout the next week and figuring that out if we can. And we might have to do, you know, like our investment of 46 grand, we'll have to do it in safe increments as we can determine where the market is and what we might get out of it. But other than that, you know, we're doing really good work here. We found a lot of good companies, a lot of companies that I feel confident in investing in going forward and making some serious money, serious return for my investment. But thanks a lot for your time. Come back tomorrow. We'll do a Christmas edition and maybe just an overview or something I'll put together. Definitely a shorter video anyway. But I'm wishing you happy holidays. Thank you for tuning in. Have a good day. Bless.